Okay, let's dive straight into this. Welcome to today's Explainer, where we're going to unpack the phenomenal evolution of one of India's absolute heavyweights, ICICI Bank. We're talking about a sheer scale of transformation here that is, frankly, genuinely hard to overstate. We're going to trace the incredible journey of an institution that started out with a very narrow specific mandate and somehow grew into this global universal banking leader. I mean, today, it stands tall as the second largest weighted stock in the Nifty 50.
Which, really begs a massive question. How exactly did a 1950s project finance institution transform into India's most comprehensive digital banking ecosystem? It's a fascinating contrast when you think about it. You've got these very traditional, mid-century roots on one hand, and today you have this massive cutting-edge technology footprint on the other. So to really understand how they built this modern empire, we need to open the vault and look at where the whole thing actually began.
Act 1. The Making of a Giant.
The chronological journey here is just truly remarkable. The whole thing started way back in 1955, formed at the initiative of the World Bank, the Government of India, and industry reps, strictly as a development financial institution. Fast forward a few decades to 1994, and ICICI Bank was officially incorporated. But in 1999, that was a massive historic milestone. ICICI became the very first Indian company, and notably the first bank or financial institution from non-Japan Asia to actually be listed on the New York Stock Exchange. Then, hitting 2002, we see the monumental merger of the parent ICICI with ICICI Bank, which ultimately created the modern entity we know today. Now, that 2002 merger wasn't just a minor corporate reshuffle, it was a fundamental structural shift. They completely transformed from a niche institution that was only offering long-term project finance into a fully diversified, universal financial services provider. Why did they do this? Well, converting into a commercial bank gave them the absolute golden key, the ability to accept low-cost demand deposits and offer a massive variety of everyday products. This allowed them to start generating serious fee and commission-based income. It was, quite literally, the birth of a modern banking behemoth.
Act 2. The Too Big to Fail Moat. So you might be wondering about this DSIB designation, right? A domestic systemically important bank is a special label given by the Reserve Bank of India. It essentially means an institution is quite literally too big to fail. ICICI Bank shares this prestigious, highly protective regulatory status with only two other peers in the entire country, the State Bank of India and HDFC Bank. Being legally recognized as systemically important to the national payment system creates this incredible, almost impenetrable fortress around the bank. Now, what's really interesting about this is how perfectly ICICI Bank aligns with the core principles of competitive moats. First off, they have that massive regulatory moat we just talked about. Second, there's an immense scale advantage. I mean, this is reflected in a stock price action boasting a 52-week range of 1,188 to 1,494 rupees. And third, they've built enormous switching costs by deeply integrating their technology into the daily lives of corporations and retail customers alike. It makes leaving them incredibly difficult.
Act 3. The Digital Banking Matrix.
Just listen to the sheer ambition in this vision from Executive Director Anup Bagchi. ICICI Stack is the result of an evolving and pioneering journey to build digital solutions in large capacity to fulfill the vision of Digital India. You can literally hear the drive there, right? They aren't just trying to launch another banking app. They want to be the ultimate digital backbone of India for retail users, businesses, hot new startups, and massive e-commerce platforms.
The sheer scale of this ICICI Stack matrix is absolutely staggering. They offer nearly 500 distinct digital services and APIs spread across 4 core pillars: accounts, payments, loans, and care. Think about it. You can instantly open a savings account with a fixed deposit, get a home loan sanctioned, set up your UPI payments, and buy health insurance. And the kicker? A customer can do almost all of this without ever once setting foot inside a physical branch.
And they've catered this incredible technology to very specific user needs. For the everyday retail user, they have the iMobile app. This is their one-app strategy, which features over 400 services and includes a tool called iFinance that actually lets you track expenses across your other non-ICICI bank accounts. For businesses, they launch InstaBiz, an all-in-one application for instant overdrafts, tax payments, and export-import transactions. And on a macro level, their API integration allows massive fintechs and e-commerce merchants to just plug right into ICICI's volume handling capabilities practically overnight.
Act 4. The Customer 360 Strategy.
So the crucial point here, the real secret to their strategy, is the immense power of subtraction.
In shifting to this customer 360 approach, ICICI realized that complexity is basically the enemy of a good customer experience. Believe it or not, they used to have around 1,000 complicated overlapping product variants. 1,000! They aggressively rationalized those down to just 600. By wiping out those complexities, they created leaner processes, implemented a seamless 1KYC framework, and drastically sped up customer onboarding.
And here is how that streamlined strategy actually plays out in the real world, step by step. It starts with their cloud-based ICRM platform, which is used by about 100,000 employees across 7,000 business centers to build a unified Customer 360 profile. That incredibly rich data then feeds completely seamlessly into iLens, which is their industry-first digital lending platform. Because all these systems are constantly talking to each other via APIs, iLens handles the entire loan lifecycle, from instant sanctioning and digital verifications all the way to disbursement, entirely friction-free. Meaning you, the customer, get your loan way faster with zero headaches.
Act 5. Financial health and stability. The global validation for all of this tech and strategy is just undeniable at this point. Moody's recently reaffirmed ICICI Bank's BA3 long-term deposit rating with a stable outlook. This is a massive vote of confidence, and it's anchored by their robust solvency, incredibly strong internal capital generation, and stellar asset quality. To give you an idea, their gross NPA ratio is down to a tiny 1.38%. It completely proves that the underlying foundation of this bank is rock solid.
And this brilliantly illustrates exactly why the market is so incredibly confident. We are looking at stellar Q1 FY27 results, featuring a standalone net profit of a staggering 14,804.50 crore rupees. That is a 15.9% jump year over year. This success is built on a 5-year profit growth trajectory of 24.51%, which ultimately drives a superior return on assets of 2.0%, especially impressive when you consider the industry average is hovering way down around 1.4%. That superior profitability? That's a direct, undeniable result of their operational efficiency and massive digital scale.
So if we pull all this together and summarize these financial pillars, you've got this massive profitability driven by a totally industry-leading net interest margin of 4.36%. You have the safety and liquidity provided by their gigantic retail franchise, which brings in a huge cushion of low-cost CASA deposits. And of course, circling back to our earlier point, you always have that underlying safety net of moderate government support, simply because they are so systemically vital to the entire Indian economy.
Which leads us with this final, kind of provocative thought to chew on today. As digital ecosystems continue to rapidly blur the lines of what we even consider traditional banking, how will ICICI Bank's massive scale and deep tech integration redefine the switching costs of tomorrow? Think about it. When a bank powers your e-commerce platform, tracks your daily coffee expenses, and approves your mortgage in literally minutes through a single unified stack, walking away becomes almost impossible. Thank you so much for joining me for this explainer on ICICI Bank's incredible transformation. Keep asking questions and keep learning.